Hi, my name's V, and I'm the founder of Connect to Accountants, the place where people come to learn financy stuff in an easy to understand way.
The accounting equation is simple. Assets minus liabilities equals equity. Equity is the basic net worth of the business. It's also known as the balance sheet equation and shows what you own, that's your assets, and what you owe, being your liabilities, and how that affects the business. Every action in the business affects this equation in some way, making the net worth of the business increase or decrease. So let's look at some different examples. Say your business earns $400 in sales and $200 in expenses for the year, and all of this has been paid. So sales will go into the cash account to increase it, and all the expenses will go into reducing the cash. So the difference between your $400 in sales and your $200 in expenses is $200. Your cash has also increased by $400, but also decreased by $200. So in the end, you only have $200 in cash. So the difference between the sales and expenses is your retained profit. That's equity. That's something that's part of the net worth of your business. And the $200 in cash is also there as well. So you've got your asset of cash, $200 equals $200. That balances. That's the equation. Let's say now that you buy a car for $10,000 and borrow $10,000. Well, first of all, you'd record that your borrowing has gone up $10,000. You also have cash now because of your borrowing, and that's $10,000 more too. But then when you buy the car, you're going to reduce your cash by $10,000, but you're going to have a car of $10,000. So if you eliminate your cash, what you have is your asset of the car for $10,000 at this point, and your borrowings $10,000. If you apply that formula, assets minus liabilities, that's $10,000 minus $10,000 is zero. So what you do have left with this equation, if we include the example of the sale, is 10,200 minus 10,000 equals 200, and that equals the equity. What you'll see is that